Hey everyone, welcome back to Corporate Decoder. Today we're diving into Velocity Financial's latest quarterly report. It's like a treasure map, only instead of gold, we're hunting for clues about the company's financial health. And let me tell you, some of these clues are buried deep. We're going to dig into everything from profits to risks. Get ready to decode this corporate puzzle with me. Velocity Financial seems to be riding high on its interest income, but is it all smooth sailing? We will look at some numbers that might say otherwise. Let's jump right in. Velocity Financial is a company that deals with real estate financing, specifically for investors, not your average homeowner. They're like the bank for people who want to buy rental properties or commercial spaces. They just filed their 10Q, which is their quarterly report card with the Securities and Exchange Commission, basically showing the world how they've been doing for the first 3 months of 2025. This report covers January to March of 2025, so let's see what the numbers tell us. Alright, let's talk money. Their cash and cash equivalents, which is like their readily available funds, are up a bit to about $51.7 million. That's a good sign. It means they have some cushion to work with, but the real story is in the loans. They're holding a lot of loans for investment, about $5.6 billion worth. That's where they make most of their money, but it also means they are in charge of how they measure the gains from their assets. To finance those loans, they are carrying a significant amount of debt, especially in the form of securitized debt, valued at around $2.5 billion. This is debt that's backed by the loans they are holding. Now, the key thing is that both those loans and the debt are being measured at fair value. What is fair value, I hear you ask? The company can use estimates and internal evaluations to evaluate these prices, while the fair value can shift quickly and wildly. This accounting choice significantly impacts their profits. Their main gig is making money off the interest from their loans. That interest income is up to $118.7 million for the quarter. That is awesome for the surface, until you consider the next line. But whoa, hold on a second. The amount they paid out in interest to finance those loans is also way up, now costing $75.1 million. This all leads to $37.5 million in net interest income. It is positive, but is the work worth it with all the wild evaluation changes of billions of dollars? We will see. Now we're getting to how much money the company can get from lending and selling these loans. Decoded, they made a little money directly selling loans, roughly $2.8 million, but this is nothing compared to how the price can change from evaluations. Here's where things get interesting and those wild swings I was mentioning earlier. Thanks to the accounting standards they're using, they have to reevaluate all their assets. Unrealized gain on fair value loans just means that the price of their loans have gone up. And with it, they can increase their profits by $34 have gone up. And with it, they can increase their profits by $34 up to be earned from this position. Unrealized loss on fair value securitized debt means that the debt they borrowed to acquire these loans suddenly became more expensive. This one cost them $13.7 million. Both these swings are important when we consider the company's profits. After all the accounting and adding and subtracting and everything, they paid about $8.2 million in income taxes, landing them with a net income that is profit of $18.9 million. On paper, remember that most of the company's profit came from those wild price evaluations, not the direct selling of loans. That is something to keep in mind. For each share of Velocity Financial, the earnings were roughly 55 cents. That is a nice payday. What is a cash flow hedge, I hear you ask? Well, it's complex, but to dumb it down, it is another form of price control. It protects their money from market fluctuations. So what about the cost of running this whole operation? Well, it's not cheap. Employee compensation and benefits are a big chunk, coming in at about $21.7 million. This is pretty normal since their employees are the heart of their lending activity. Paying the people that service the loans to take care of the borrowers, it's costing them roughly $8 million. Okay, let's dive into the less exciting but super important world of risks. The report states it omits the details about the market and the changes that might come, but let's investigate why that might not be wise. They are also involved in a bunch of normal lawsuits and claims, but they said it won't be anything major, though it does depend on the lawsuits. Are no details about the risks because it's a small company. Not great. Some of their top executives have pre-arranged plans to sell off some of their stock in the company. This could be a sign that they aren't as confident about the future as they're letting on, or it could be that they are cashing out, maybe to buy a boat. I am just saying. Some of the information regarding shares were omitted because it's a small company. It does provide a nice summary chart on the stock, which is useful though. They have been playing with their stock and selling it to funds related to people they work with and then buying back the stock to keep the prices stable. What they're doing is a little suspicious, but they technically did nothing illegal, so it is within their power. The corporation does not have any current defaults and is in compliance with every request. To put a nice little bow around it all, their cash increased roughly $3.6 million during the quarter. So what is the overall picture we get from this report? Well, on one hand, Velocity Financial is making money and is not at imminent danger of defaulting. They are a strong and experienced company, a titan in the lending space. They have a proven system for managing money, but they also seem to be relying a little too much on creative, subjective markups and markdowns to evaluate profit and not in actual business success. It's not a bad business, but it certainly carries some risk with it. I mean, they even admitted that they are ready to sell and loan at any minute depending on which way the wind blows. If they start to post a loss, it'll be a house of cards. So watch out. That's all for this corporate decoder. If you like, please like, comment and subscribe. See you all next time.